All right, let's move on. Well, it's not Halloween yet, but the major retailers are already gearing up for the Christmas season, as you can imagine. So the question is, will the brick-and-mortar stores hold their own against e-commerce juggernaut Amazon? It's a question we ask pretty much every day. Let's bring in Bryn Trust CIO Ernie Cecilia. Ernie, you know, the dominance of Amazon, we know how dominant they are. However, let me just say this, maybe because I'm old school, I still like to go into the brick and mortar places. I like to actually feel the product, put something on, you know, actually have that experience. I can't be bothered to order something online and it doesn't fit, or I don't like it, it doesn't feel right, the product is cheaper than I thought it was. I don't want to have to go through the hassle of returning it. Maybe just because I'm old. But am I an outlier on this?
If you're an outlier, actually, I guess there's two of us who are outliers. However, the entire issue of buying items online and the issue of returning them has become much easier. So that whole process actually has sped up. So, and actually, it's not costly to the consumer. So the companies make it very easy, Amazon in particular, with returning items. And people actually will order items and return them, order several items and return them. I think the key issue for Christmas, however, coming up, let's get back to the consumer itself, is that we do think it's going to be a strong season. I mean, consumer spending should be pretty strong. We have strong job growth, which develops high confidence or pushes confidence to a high level. Incomes are growing, although at a slow pace. September was a good number. Whether that's an outlier or not, time will tell. But we do think that bricks and mortar retailers will have a more difficult time competing against not just Amazon, but that Amazon effect, if we can use that term, if you will, the online. So the clicking is going to be better than the bricks again this Christmas. The issue, however, is that on an incremental basis, it will be more difficult for those bricks and mortar retailers to defend their business models and really grab incremental sales, because what we're really talking about is growth in sales, not just absolute sales. So we do think that the clicks will beat the bricks, but it will be a good holiday season for consumers and for retailers in general.
What about the markets as a whole, Ernie? You know, okay, we've got this milestone, 23,000. It really is just a milestone. It doesn't, by itself, doesn't really mean anything, but it does speak to, I think, the strength of the economy, solid earnings and profits from companies. I mean, if you haven't joined in this rally, you obviously feel sick about it. But would you still be inclined to believe this market can still continue to melt upwards?
Well, we won't use the word melt, but perhaps propel upwards. The issue, and it was, I think, really borne out today to a large extent, Ashley, is IBM's earnings. Yeah. Our view is that earnings drive stock prices, and earnings have been very strong. If you go back to the fourth quarter of 2016, the first half of this year, and what looks to be a beginning of a pretty good third quarter earnings reporting season, earnings are really the driver behind stock prices. And even more so, that'll be the case, because one of the issues that we've had at our backs has been monetary policy, quote, easy money, if you will. That's changing. The Fed is beginning to tighten, has already begun to tighten, not only in raising short-term rates, but also will now draw down its balance sheet. So we have monetary policy as a headwind, not a severe headwind, but a headwind.
Right.
And a key issue, in our view, to drive earnings will be fiscal policy, and particularly tax and regulatory reform.
I'm glad you mentioned that. Let me go down to Nicole Petalides again at the Stock Exchange. Nicole, tax reform. You know, there's been all sorts of thoughts on this. Steve Mnuchin, Treasury Secretary, says if we don't get tax reform or some sort of tax relief, this market is in trouble. Others say, not so fast.
It's really interesting that you say that, because that is what I've heard about tax reform. Tax reform has been front and center since last November, when the administration was put into office, and that boosted this market. But what's interesting, over the last couple of weeks, I've heard a different tone. We heard it on the JP Morgan conference call. The CFO saying they're not counting on tax reform anytime soon. I'm paraphrasing, but it's interesting now with the optimism that Wall Street has had, globally we've had, people are counting on it less. I think ultimately they still think it's going to happen. If it were off the table, it would be a market crusher. But if it doesn't happen immediately, I don't think that that's going to, what I'm hearing, people are still believing it's going to happen, but they're not counting on it right away. They're just looking at the fundamentals and the optimism.
Ernie, I've got 10 seconds. Which sector would you pick over all the others right now as far as a growth prospect?
We like financials, actually, for the reasons that I mentioned about the Fed, about rising interest rates, and about fiscal policy. Balance sheets are strong and valuations very reasonable, and we think
Plus
it's a sector that is under-owned.